Hello traders. Today is the 27th of January 2011, and happy trading to you all. Today we have released the TSTW SYS008, the third TSTW trading system, now available at www.stochastic-macd.com. This is about the game changer. The TSTWSYS008 is designed to allow traders to harvest profits and to enjoy their trade. After the hard work, you must enjoy the trade. You must start enjoying your trade. We believe that trading must be enjoyed and can be enjoyed. In this video, I want to talk to you about the exponential moving average 20. How can you use the exponential moving average 20 like a professional trader? We know that in my previous video, I talked to you about how you can use the exponential moving average 10 like professional trader. In this video, I want to talk to you about how you can use the exponential moving average 20 like professional trader. Okay? We know that when the price is rising, the first support level is the exponential moving average 10. And then after that support level is broken, the next support level is the exponential moving average 20. Some traders will always buy when the price is rising and pull back near the exponential moving average 20. They will buy. You see here, the price was going up first and then try to go down near the exponential moving average 20. They will buy, and they will buy with a very tiny stop loss, 20 pip, 15 pip, a very tiny stop loss, and they will use the same amount of stop loss for every trade. They don't care whether they are taken out of the trade or not. Using this method, we are now on the monthly chart, 20 days monthly chart of the Euro USD. How can you use this strategy? Is that the price is rising, now it's pulled back near the exponential moving average 20. You will switch back to the lower time frame to monitor the activity there in order to cream the market in the direction of the trend. So for somebody who is day trading or who want to swing trade, you see the price rising first. Now it pull back near the exponential moving average 20 on the monthly chart. You go to your lower time frame looking for a clear cut entry point using either trading system, any trading system that you have to participate in the direction of the trend. In this particular case on the monthly chart, people who want to swing trade will buy at the edge of the exponential moving average 20 with their stop loss outside the exponential moving average 20 right here. We know that when the price is above the exponential moving at 10, that's extremely bullish. When it retraces, when it switch from the exponential moving at 10 to find a support on the exponential moving average 20, that's bullish, but it's extremely bullish above 10, only bullish when it's above the exponential moving average 20. So once you are the price, the exponential moving, what you want to look for is for the exponential moving average 10 to be rising, and the price to pierce the exponential moving average 10, try to seek support near the exponential moving average 20 right here, as it happened here. You will buy right here. You know that the trend is still going up because the exponential moving average 10 is still rising. It's telling out the direction of the trend. And you will place, when you are buying here, you place your stop loss outside the exponential moving average, behind the exponential moving average 20. That's how the professionals are using the exponential moving average 10 and the exponential moving average 20. I do not use this type of method, but we are perfectly aware of it because we try to go into the mind of other traders to know exactly what they are doing. Okay? And when the price is going down, the first resistance level for the price is the exponential moving average 10. Okay? When the price is going down behind the exponential moving average 10, that's extremely bearish. If the price fails to find resistance on the exponential moving average 10, the next resistance level is the exponential moving average 20. If the exponential moving average 20 also fail, the price will seek the exponential moving average 30. If the exponential moving average 30 fail, the price will seek the exponential moving average 50. That's how the market is behaving all the time. Okay, so in this downtrend, this is not a perfect one because we're on the monthly chart. The price is going down. Price, you see that the exponential moving average 10 is still going down. You see the direction. That's why it's telling you it's going down. Now the price try to go above it. You will seek for opportunity to sell on the other side of the exponential moving average 10 because it's still going down. Here again, you see that the price, the exponential moving average 10 was still down, was still going down. We want to check the slope. The slope is this. The question you have to ask is the slope negative or positive? Here the slope is negative, which means going down. We see that on this monthly chart, the price try to go above it. We will seek for opportunity to sell here because the price shouldn't be doing that because the exponential moving average 10 is telling us that the movement is still going down. Here you see that it started going up, confirming to us that the trend is up. Okay, if the price try to go behind it, we look for opportunity to buy. Again, looking on this chart, we will see the exponential moving average 20. It's not a perfect scenario that I can show you. If we want the price to be trending, we don't want the price to be consolidating. I show you already for the uptrend how you do that. I'm looking now for, I do not have any example clearly for the downtrend, so I have to use this case. So the price, it were completely below the exponential moving 10, which was extremely bearish here. If it did manage to come here, particular case, the exponential moving average 10 was still going down in this particular case. When the price tried to go above it near the exponential moving average 20, as you can see here, people sold it. Okay, I will try to change this currency pair with another one. I will try to put, for instance, I'll put instead the USD CHF. That will definitely give us the example for the downtrend. Because this video is for educational purposes only. It's neither a solicitation or an offer to sell or buy anything. Here we have the USD CHF currency pair. As you can see, the white line is the exponential moving average 10, and behind that we have the orange line, which is the exponential moving average 20. We are on the monthly chart, 20 days monthly chart of the USD CHF currency pair. So as you can see, the price failed to find resistance at the 10 exponential moving 10. We will look for opportunity to sell at the edge of the exponential moving average 20. That's what happened here on the monthly chart. This strategy is a powerful trading method on the weekly chart and the monthly chart. Sometimes on the daily chart, even on the daily chart. Okay, you can even use that on the 4-hour chart. Okay, price failed to find support at the first, to find resistance at the first resistance, which is the exponential moving average 10 in the downtrend. The next resistance level is the exponential moving 20. If that one also failed, it will be the exponential moving at 30. If that one also failed, it will be exponential moving at 50. So this is how you use the exponential moving at 20, like professional trader. So you see here it failed. The price tried to go above the exponential moving 20. We will check the slope of the exponential moving 10. Is it going down? Yes, it's going down. Why the price now popping its head out of it? We will look for opportunity to sell at the edge of the exponential moving average 20. That's what happened here. So for those who are day trading, they see the price below. We see the exponential moving average 10 going down. Okay, which means the trend is down. Okay, now they see a rally in the downtrend, which means the price popping its head out a bit. Okay, so those are people taking profit in the downtrend. 1, 2, 3, 3. This is 3 months. Okay, this monthly chart try to pop out a bit. You see here, it pop out a bit. Professional knew that the trend is still down. They sold it right here. This is a beautiful place to sell. The same thing happened here. The slope is still down. It pop its head out at the edge of the exponential moving 20. We will sell. Okay, and this is how sometimes people, traders will create their watch list. They use this strategy. So they see the exponential moving 10 going down. They know that it's down. They see the price will pop up. This is an excellent candidate for day trading. So the next day, when this happen in the evening, you notice that the next day you are waiting for opportunity to sell because you know that the slope is down. This is popping out. It's an excellent place to sell. The next day you are looking for opportunity to sell on your 5-minute chart or on your 10-minute chart or your 50-minute chart on your hourly chart, which is the time frame you use for your day trading. So that particular month you'll be busy selling because you know that it's going to go down more. So you see, you waiting for the green candle and then sell, green candle and you sell, green candle and then you sell, because the slope is still going down. And if the 10 fell, you know that it's 20. So you want the price to pop out of the exponential moving average 10 that is going down near the exponential moving average 20, and then you are busy selling there, placing your stop loss on the other side of exponential moving average 20. Okay, so this is a beautiful one here. Also, we see that the slope of the exponential moving 10 is down. Okay, you can use this on a weekly chart, on a daily chart, on a monthly chart. For those who are using the swing 240 trading system, you go to the higher time frame of the swing 240 trading system, you apply the same method, and then you switch to the lower time frame of the swing 240 trading system to cream the market using the same method. Okay, the 10 and the 20, you can perfectly place that and use this strategy that I'm showing you. This is swing trading strategy, or for selecting excellent candidate for day trading. So the slope is still down. You see he pop his head out, but some I don't use this method of trading. That's not my style. Okay, you can see here that some traders are trying to sell here. The price went down, but the next day the price pushed further up. Okay, but those who are using the TSTWS 008 will not be fooled at all. They will know what's going on. But some traders, that's what they use. They use the same amount of stop loss in this strategy, and they don't care whether they are taking out or not, because they are using a very tiny stop loss, and this is their trading method, and that's what they will use all the time. They will sell at the edge of the exponential moving average 10 in the downtrend. That's what they were doing. Okay, so this is a nice one for those who are selling at the edge of the exponential moving 10. The slope of the exponential moving 10, which is telling that the direction is going down, the price popping out above the exponential moving 10 near the exponential moving average 20, we will sell. This is a gorgeous one, and it just went down. Okay, it went down nicely, beautiful, gorgeous. Okay, so this is how you will use the exponential moving average 20, which is the next resistance level after the exponential moving average 10. In this particular case here, this is a dodgy one, but you can see clearly here, you won't fall into this, because you can see here after this green candle here that the slope of the exponential moving average 10 was rising. So you don't want to sell, okay, because it's rising. You use the 10 to find a direction first. So this is not to sell, okay, because it starts rising. You want exponential moving average 10 to be going down and the price to pop out. That's what you want. Okay, so this is a gorgeous one. It's going down, now it pop out. Okay, that's what you do. I'll go quickly on the 5 days for you. Okay, using exponential moving average 20. Again, you see here, this is not a very good one either, because we are, again, you see it start rising. I will be very, very careful if I want to sell here. I will sell with the very tiniest stop loss that I can imagine, because it start rising here. I'll put a question mark. I don't want it to be rising. I want it to be going down, and then the price doing the opposite to what exponential moving average 10 is doing. Then I will sell at the edge, you see. But here it start rising, fooling people that the market is going up, but it was successful. You may decide not to sell here, okay, or if you are selling, sell with a very, very tiny stop loss. Okay, but as soon as you see this red candle here, you know that the party is back on. Okay, so it was going like this, it start rising here. You don't want to take part, which means you step aside. After you see this red 5 days, okay, you will sell after that here, placing your stop loss outside the Bollinger Bar, outside the exponential moving average 20 here. That's it, and it's nicely successful. Here, the exponential moving average 10 is still going down. He pop his head near the exponential moving average 20. You see here, you will sell and placing your stop loss on the other side. Okay, this is how you use the exponential moving 20 like professional traders. Again, here, this is in the uptrend. The price failed to find a support directly on the exponential moving 10, which is the white one, came near the exponential moving average 20. First, you must check the slope. Here is no very good one because it's going horizontal a little bit here. It's a kind of consolidation here. But in this case here, it started going up. This is a gorgeous one, okay? The momentum was quite strong here. But when you are doing this, always pay attention to the resistance level in the case that you are buying, okay? So again here, this is a gorgeous one, okay? A beautiful, gorgeous trade here. As you can see on this USD CHF, you can see that exponential moving average 10 is going down, telling that the price must go down, okay? Now the price is popping its head a little bit near the exponential moving average 10. You know what? It's the smart money that is doing that because they know that the trend is going down. they will force the price to come near because they want to sell at the best place. If you see that happening, take part into it, because the 10 is telling us where the price is going. The price doing the opposite, popping its head out, giving us opportunity to sell. We want to sell the rally in a downtrend and buy the pullback in an uptrend. That's how we do it, okay? So we want to know where the price is going first. The price, the number one indicator. We use the exponential moving 10 to tell us the moving average are the nearest thing that you can see to the price. The moving average 2, the exponential moving average 2 is the nearest to the price. The exponential moving average 1 is the price itself. Exponential moving average 1 is the price itself. The exponential moving average 2 is the nearest to the price. And the third one is the exponential moving average 3, okay? So the moving averages are near to the price. In fact, most of the indicators that we use are next to the price. Why don't you use the real thing, which is the price itself, the number one indicator? Now, moving on, okay? Again here, how do we use the exponential moving average 20, the professional trader? You see the slope of 10 going down nicely. The price popping its head out. Right here, boom, down, okay? Same thing, going down. Here it's not very good one because the price starts going like this. You will sell after this candle, but not before that, because the 10 started going up, okay? After this one, we know that the part is on. We will sell here, placing the stop loss outside the 20 here, okay? Here the slope is quite going down, as you can see, it's going down nicely. It popped near. This is extremely bearish after this doji here and this red here. You know that you have to place your stop loss below this support because there's a support here, and boom, you see how what's happening here? Down very fast. I hope you enjoyed this video also, that you put into practice to use the exponential moving average 20 like professional trader. In the next video, I will show you how to use the exponential moving average 30 like professional traders. We are the TSTWSYS 008 traders. Thank you for watching, and speak to you soon.